All right, guys, hope you all are ready for today's video. We got a lot of information to go over, so please bear with me. I'm going to try to put this in chronological order the best I can. I was digging around. We were talking about yesterday on the live stream about that Oasis Petroleum special dividend of $15, which is now the company Chord Energy. So I was digging around there, and I got to show you what I found out today. All right, so here is the big topic. That's right. Oasis Petroleum declares special dividend of $15 per share in connection with its merger with Whiting. Okay, so as you see here, this article was on June the 16th, but let me bring you up to date with the article that is out here on July 1st. It says Whiting and Oasis complete combination establishing Chord Energy, which is the website we're on here. Here you can see Chord Energy is a scaled, unconventional U.S. oil producer with premier Williston Basin acreage position and sustainable free cash flow. Now, going down here and looking over some of this now, here you can see it says that they have top tier assets across approximately 972,000 net acres now, combined with the first quarter production of 171.1 thousand BOE/PD, and we got down here, it's going to be under the ticker symbol CHRD, which I have that pulled up right here. So here it is, ticker symbol CHRD. So here you can see Chord. This is where I want to go over. This is here pretty interesting and down below here. Chord is well positioned to drive significant shareholder value with added scale, high quality assets, and sustainable free cash generation. Chord has significant financial strength anchored by attractive balance sheet with an expected net debt to EBITDAX ratio of approximately 0.2 as of June 30th, 2022, which is pro forma for Oasis $15 share special dividend announced on June the 16th and the $6.25 share cash merger consideration paid to Whiting shareholders in connection with the closing of the merger. So keep that in mind. That is pretty interesting there. I wanted to go down here, and there was another part, credit facility. Here you got the second quarter guidance update, and down here it goes your oil volumes, your MBBL, and you can see the pro forma Chord is 88.6 to 90.4. Total volumes is about 156 to 158. Oil premium / discount to WTI per barrel of oil. Saying pro forma $1.20 to $1.95. Now, down here is what I wanted to go over with you guys. Share exchange on this Chord Energy. This was on their investor presentation, which they had this as well. I had the investor presentation pulled up. And it says, as previously announced in accordance with the terms of the merger agreement, Whiting shareholders are receiving 0.5774 shares of Oasis common stock and $6.25 in cash for each share of Whiting common stock owned. The Oasis board of directors declared special dividend of $15, which will be paid to the Oasis shareholders of the record as of June 29th on or about July 8th. Former Whiting shareholders will own approximately 53%, and former Oasis shareholders will own about 47% of Chord on a fully diluted basis. Okay, so with the completion of the transaction as of today, Whiting common stock will no longer be listed for trading. Whiting previously traded under the ticker symbol WLL. Oasis will continue trade under the ticker symbol OAS until July 5th, when Chord is expected to begin trading under the ticker symbol CHRD. So what I'm getting from this is very interesting. So we had two oil companies. We had Whiting, we had Oasis Petroleum, which we knew that. Those two companies, in a sense, combined, and we created Chord Energy. And I found this one very interesting up here for the Oasis common stock. For Whiting shareholders. So Whiting shareholders are getting shares, which is very interesting. We talked about this. What if our MMTLP convert? What if we do get bought out by a big oil company? What if it's ConocoPhillips? What if it's ExxonMobil? Would we get a pro rata amount of the shares? So here you can see Whiting shareholders are receiving Whiting shareholders receiving 0.57 shares of Oasis common stock and $6.25 in cash for each share of Whiting common stock owned. So that is very interesting. Right there it says it. They're going to get the 0.57 shares of Oasis stock and the $6.25 cash of that, which then Oasis stock went bye-bye here on July 5th. So then your stock would then, I guess you would have to sell it out or it just cashes out at the closing price. I found this article as well here, backdated on May the 4th, so a while back. Oasis Petroleum reports first quarter 2022 earnings, declares base and variable dividends, issues second quarter outlook, and provides update on pending merger. Guys, this was published on May the 4th. And if we get down here to the actual merger information, here it shows Oasis merger and Whiting Petroleum continue to make progress and expect the merger to close in Q3 of 22. Oasis and Whiting filed a pre-merger notification and report under the HSR Act and are waiting periods with respect Threado have expired. Oasis filed registration statement on an Form S4 on April 28th, 2022. Okay, so now we're here on the Chord Energy Investor Presentation Deck. This was just published 10 days ago on July 1st, so get this right off their website. And I wanted to read something to you that I found very interesting in their statements down here. So here it says, welcome to Chord Energy. They got some disclosures, but down here it has cautionary statement regarding oil and gas quantities. So I wanted to zoom in on this, and I wanted to read this with you guys because this could be very helpful for our situation. So here it shows the SEC requires oil and gas companies in their filings with the SEC to disclose proved reserves, which are those quantities of oil and gas which by analysis of geoscience and engineering data can be estimated with reasonable certainty to be economically producible from a given date forward for known reserves and under existing economic condition using unweighted average 12-month first day of the month prices. Now that is interesting. So we talked about this rolling average before, guys. We talked about it and we got it right here. So they're talking about using unweighted average for 12 months, but the first day of each month price. So that is going to be something interesting we're going to take a look at. So if we just say from July to July, we may need to look at the first of every month for the last 12 months to see what is that rolling 12-month first day average, because that's very interesting to see. So we'll have to get those 12 prices from the first of every month and calculate them up and divide them by 12 and see what our average price is. So let's keep going here. Operating methods and government regulations prior to the time which contracts provide the right to operate expire unless evidence indicates that renewal is reasonably certain regardless of whether deterministic or probabilistic methods are used for the estimation. The accuracy of any reserve estimate depends on the quantity of available data, the interpretation of such data, and price and cost assumptions made by the reserve engineers. In addition, the results of drilling, testing, and production activities of the exploration and development companies may justify revisions of estimates were made previously. Insignificant, such revisions could impact Chord strategy and future prospects. According reserve estimates may differ significantly from the quantities of oil and natural gas that is ultimately recovered. SEC also permits the disclosure of separate estimates of probable or possible reserves that meet SEC definitions for such reserves. However, neither Whiting nor Oasis disclose probable or possible reserves in its SEC filings. The production forecast expects Chords for future periods are dependent upon many assumptions, including estimates of production decline rates, existing wells, and the undertaking of outcome future drilling activity, which may affect by significant commodity price and declines in drilling cost increases. So this is another interesting part here. We talk about this $15 special dividend, and it says neither Whiting nor Oasis disclosed probable or possible reserves in its SEC filing. So that's very interesting, because we talked about this. Tony Market Moves will bring it up. We need proven reserves. That's where the big money's at. And that could be another factor why this is only $15. And that's what we're going for. And if George and, we got the team out there. George has a team out there. I'm sure Berta and Greg McCabe and all them. Greg McCabe's sitting back. He knows he has a great team out there working on it. And they're going to make sure they can get this proven. If there is proven oil, proven gas, we're going to freaking get banked. There's a lot of predictions out there if you watched the live stream from last night, where we talk about it is possible for an $80 dividend, and that's not even including the gas, guys. I believe, I was trying to find on here, because I think someone said this is for 250 million barrels of oil, and we have 3.2 to 3.7 billion. That's right. Not million, billion. So keep that in mind. Even if we go to 3.2 billion and this one only had 250 million, and it's saying that neither of them disclosed probable or possible reserves in SEC filings. So very interesting here. I dropped a lot of information. It's a little bit all over the place, I guess, but I try to put it together as best I can for you all. So yeah, hope you all enjoyed today's video. I think I covered everything I wanted to cover here. I'm just going over my tabs real quick. I did find the oldest announcement that I could find when they originally announced this merger was back on March 22nd. Now, I know this one announced the merger back in March, but these were already two separate oil companies, and they both filed. The deal between the companies which had filed Chapter 11 bankruptcy in 2020, following a crash in energy prices. Now, keep that in mind. John Berta, an investor asked John Berta, would Torch made it through that? And he said probably not. Torchlight probably would have filed bankruptcy along with Oasis and Whiting, but they did get through it. They combined together. They make Cord Energy, and it's just rocking and rolling right now. They have, I believe I saw it on here. They have $4.6 billion market cap, guys, and I saw on the investor deck they have like over $1 billion in free cash flow. So the oil company is doing really great, to say the least. Yeah, $4 billion market cap. They got over 25% cash sitting on the books right now. Free cash flow. I might be able to find it here real quick. They had it in one of their statements. Free cash flow. I just want to show it for you guys. There it was. 1.4 billion free cash flow right there. 1.4 billion free cash flow. So that's what I'm talking about, man. Oil companies doing great. I'm still very bullish on everything. I just wanted to share all this out with you guys. Hope you all enjoyed this research that I did put right there. That's free cash flow. We'll zoom in on that. Boom. Free cash flow, 1.4 billion, and we're setting at a $4.6 billion market cap. So over 25% of the market cap is sitting in cash on this bad boy. So hope you enjoyed the research. Comment down below anything I missed, and I will catch you on the next video, guys. Peace. Oh yeah, I hope you didn't tune away, but I forgot to touch base on this. We're in a bear market because MMTLP is up 25% in 5 days. Where is the bear market? Where is the bear market? Speaking of bear market, you got MMTLP here. Average volume is 324,000, traded over 600,000 in volume today. Where's the bear market? This is like my number one play in the market right now. MMTLP, number one play, hands down. It could be bear all at once. This could drop down to 10 cents tomorrow. I'm going to sell everything and buy this bad boy because, yeah, that's just the way it is. My number one bullish play. Bear market, bring it on. 25% positive in 5 days. Let's go.